In this video here today, I'm going to share with you how I build a winning trading strategy with just one indicator and a few simple zones on the charts. But first, a very quick disclaimer. All right, before I get into the details, go ahead and do me a favor and hit that like and subscribe button here. I have tons of awesome content on this channel here that go through my trading strategies, my trading journey, and all of the prop firms that I trade with, my payouts, and how things are going for me there. So let's go ahead and get into it. I have the charts pulled up here. I'm going to walk you through how I look for opportunities in the market using one indicator and zones. So here we go. I'm going to get into this now. The indicator you're going to look up here, you're going to go to indicators in TradingView if that's the platform you use, and you're going to type in simply just swing. And you're going to put in the this one right here, the pattern smart swing. I'm going to add that to the charts here just so you can see it. Now, what I'm going to do is I'm going to first remove this from the charts, and then I'm going to put it back on because I just wanted you to be able to see which indicator I was referring to. Now, I don't like to use any indicators that are lagging. This here is simply just showing swing highs and swing lows, and they're not lagging. I personally like to look at price action, zones, and then swing highs and swing lows, and that's really it. I keep it very simple. So now let me go into these zones here. So this is how I like to trade the NQ, and it is important for me to be extremely patient to wait for an opportunity. I can't emphasize that enough. A lot of traders, they feel like they have to trade every single day, or they feel like they have to be in the market all the time, and that's just simply not the case. What has enabled me to become successful and get to where I am today is just that, being patient and not trading from a place of need. So let's go ahead and get into this now. So I'm going to quickly remove the indicator here. So I'm going to go ahead and hide it, and I'm going to go through these zones here. All right, so the first step here, I'm going to look at the 4-hour, the 1 hour, and the 30-minute, and I'm going to draw up my zones. I'm going to share with you a very mechanical way in which I draw my order blocks here, which are my zones, and then my fair value gaps, and I'm going to discuss the trading strategy, or at least how I like to trade my personal account. Now, I have to say, again, I'm not a financial advisor, and nothing here is financial advice. I don't even know if this is going to work for you. I'm just sharing with you my ideas and my opinions here. Most people end up losing all the money they trade with. That's just the cold, hard facts and reality of trading. So with that said, let me go ahead and go through these zones here. So I am on the 4-hour chart. Now, I want to be very specific here. How I draw my zones is very mechanical. And what I'm looking here for, I'm just going to zoom in here so you can see this. All right. What I want to see is I want to see a red candle wick overtaking a blue. All right. So here's the blue candle right here. And then here is the red candle. And that wick has to overtake the blue. What I'm looking for is a body close below the blue candle. And it has to happen within the first 3 candles. It can happen in 1, 2, or 3. So in this case, it happens right here on this candle. We get a close down here, and it did close below this low. All right, so then what I do is I will then draw in my order block right here, like so, just like this. I'll draw it in with the top of this red wick right here to the bottom of this blue wick, and that is my 4-hour order block. The next thing I'm looking for are untested 4-hour fair value gaps. All right, and I've drawn one right here live as we are in the evening as this is forming, okay, as a potential area of interest for me. All right, so I mark up the 4-hour order blocks and then the 4-hour fair value gaps. You can see that price traded down here today into this 4-hour fair value gap, as you're seeing right here. And I actually had a trade out of here this morning, out of this area, going back up this direction here. So that was a really nice trade for me, and I'll discuss what I did there here in just a minute. All right, so I have those here now. I have my order block here. All right, I have a fair value gap here, and I have a fair value gap here. If I come out further, you can see these. I've drawn them. And what I'm doing is I'm not extending them across like this. When price breaks through, closes below, I stop. That's it right there. Okay. All right, so here's another 4-hour order block. I'm going to move it around so you can see it right here. And you see how price comes up and it retests this order block and then continues moving in this direction? That happens a lot. Not all the time, but from a probability standpoint, it happens quite often. All right, so let me just back up here a little bit so you can see a few more. Let me look for another 4-hour order block. We have a couple way over here. I'll just scroll all the way down here. These might be 1 hours. I'm going to get to that in just a second. All right. So let me go down to the 1 hour now because a couple of these are 1 hour order blocks. So drop down to the 1 hour. Remember, I'm drawing 4-hour order blocks and 4-hour fair value gaps. And then I'm looking at the 1 hour. And on the 1 hour, I'm primarily looking at order blocks. Sometimes I'll have a order block on a 1 hour and a 4 hour overlapping, and that's perfectly fine. Okay, you can see this down here. All right, let's take a look. This right here is that 4-hour fair value gap that we had on the chart. And then over here, you can see we had a 1 hour order block here. If you looked here, you can see this blue candle wick right here just overtaking the red candle here, and then it closes above. So then price came up like this. It came right up. It retested here, and then we had a little pop up out of that area. All right. Now, this right here, if you look further to the right here, this ended up failing here, but then it came down and it popped right up out of this 1 hour order block right here. Okay, right in this area. There we go. All right, big 1 hour order block here. So I'm going to discuss the strategy here in a minute once I explain how these areas or zones come into play. If I look over here a bit further, there was another one over here. This one looks to be this was a 1 hour. And again, if I just zoom into this, you can see it right here, how clean this is. Here's the wick. Okay, on the blue wick overtaking, the blue wick pops down below the previous red candle, and then it overtakes this high right here within 3 candles. 1, 2, 3 right here. Now, what I'm looking for is on this candle here, this wick right here, I'm going to circle it, this wick right here, okay? It must be the lowest wick in the previous 6 to 7 candles. Otherwise, it's not a valid order block for me. All right, it's just what I found that works best for me and how I like to draw them. All right, so that was a nice 1 hour order block. You can see over here, price came right down into that and tapped right into it. Do you see that? All right, super simple. So if you didn't understand that, rewind this video and go back and understand how to draw these order blocks on your charts, because that's important, at least for me, in my strategy. So it's really important that you understand that. All right, let me back up here, and there's just one more all the way over here, and you can see that here. Look at this blue wick right here, blue wick down, overtaking the red. 1, 2, 3 candles up. It closes above this here, and then it retests right back into that, and then it just goes. Okay, so now that I have all of these on my charts, all right, and if I choose to, if I feel like I don't have enough levels in a given day and things are just far apart, so let's just say, for example, I removed this one here on the charts, and I feel like price is too far in between here, or it's kind of in no man's land, then I will drop down to the 30-minute, but that's as low as I'll go for drawing these zones. I feel like these order blocks, at least they work better for me on the higher time frames, the 1 hour and the 4 hour. If I'm going down to the 5-minute, the 1 minute, they just don't get respected as much or as often. They do, but I feel like this is just what works for me. All right, so let's talk about that indicator now. So I'm going to put this back on the charts, and then I'm going to drop down to the lower time frames, and I'm going to analyze these zones here. But first, I'm going to explain my strategy. I like to do what's called dollar cost averaging, but not forever. All right, not just endlessly into my position. All right, I do have points where I scream uncle, but first what I'm going to do is measure the distance between these zones here. And then I'm also going to look at the NQ and how far from a percentage standpoint price would be down for me to become interested, or how far up price would be to become interested. All right, let me just put that 4 hour order or 4 hour fair value gap back on the chart so that we have it here so that I can see it. And right there it is. It's still forming, but I'm going to put it on here anyway. Okay, I'm going to come back to the 1 hour. All right, on the 1 hour chart, if I'm looking over here on the right hand side, I can see the NQ, and I'll move this down so it's a bit here, right here. The NQ is at 0.02% right now. So what I'm going to do is get out my measurement tool then, and I'm going to start right here. I'm going to measure down here. If the NQ drops down to this area, all right, it's going to be down about negative 0.75%. Knowing that a large move on the NQ, if the NQ is moving -1, -2% in a day, that's a pretty far move, and that's at the extreme. I like to trade at these extremes, but I'm looking for those areas, these zones, and also the extremes. So I know tomorrow if the NQ drops down here in this area, all right, we're going to be about negative 0.75%. I also know that we already tested this. So I'll be a bit reluctant to go ahead and start in a position at this point. I may go in small, knowing that I'm structuring my risk in such a manner that I'm going down to the next zone right here. Okay? So if I start dollar cost averaging in right here, if I start here, I'm leaving myself enough room to take on positions down to this next area. So that if price were to come back up, by the time we get to this point, I'm hopefully, all right, at or near break even from my original position right here. All right, and that's how I like to trade both prop firms and my personal capital. Now, on my personal capital, I'll even go as far as looking down to the next zone down here. All right, just in case we get some big event that takes us all the way down here, I leave myself plenty of room. Now, how do I know within these zones when to enter the market? Let's just say we're getting a big sell-off and we have these gigantic 1 hour red candles right here. They just keep coming down forever. All right. One thing that I've learned over time is that when these sell-offs happen, for example, all right, there was a sell-off today on the 1 hour. There's a sell-off over here. There's a sell-off over here. There's a sell-off here. This was when, I think, when Trump announced tariffs right here and there was a gap. But there was a sell-off. It is important for me in my trading to let the market settle out. I don't like to just jump into these red candles down. I want to see these things kind of tailing off and dying down first before I'm making a move, generally speaking. So you can see right here, here's a really good example. All right, here's a 1 hour order block. It's over here. Now this already tapped over here. You can see that. But when it comes down and retest again, all right, I'm looking for a place to let the market settle. Okay, and it doesn't really settle here. You can see these are all just red candles. But if you look over here, all right, there was a order block all the way over here, this one. And it already tested once. It already tested once right here. And then it came down almost near it, very close to it right here. So when I see this big sell-off right here, all right, I'm trying to look for these levels or near them or letting the market settle. And then what I'm doing, all right, and this is key. So now that I have the levels drawn in, now I'm dropping down to the lower time frames. Let's just come down. I'll start at the 5 minute, for example. And I'm going to pop this indicator back on the chart here so you can see it. All right. Now I have these swing high points. All right, they're drawn on the charts for me. And you can change the settings on these to anything. You can just open up the indicator here and you go into settings, and then you can literally just change the strength of this here and the source of the swing high and swing low. And what I'm looking for is a break of market structure. All right, I'm looking for that break in market structure to confirm, okay, price is potentially going to begin pulling away and moving in the opposite direction here. What I like to do, though, is drop even further down to the 1 minute to get a better entry. You can see down here, this is today. Okay, right in here. All right, once we finally break above this right here, once we finally break above this right here, I'm becoming interested in the market then at that point. All right, I'm not saying that I'm entering right there, but I am becoming interested. And then you can see that this doesn't really come down a whole lot further beyond this point here. Now remember, my strategy is dollar cost averaging into my position. So if I am starting in right here, if I'm starting in right here on this structure break, if I start in right here, if I'm starting in right here in this area, all right, and price pulls down here, all right, I'm adding in a little. And if price pulls down further, I'm adding in a little, I'm adding in just a tiny bit. If you remember, I was fully prepared for this thing to break down to the next zone down here. All right, a full 1% down from the original zone. And then I would add in a level. Now the question you may be asking yourself is, well, Tim, when do you end up just getting out of a trade and screaming uncle? And that is subjective to everybody. It's dependent upon your risk tolerance, right? For me, if I have gotten down to this point and this level starts breaking, well, then at that point, my idea was wrong and I'm looking to get out of the market. I'm looking to just cut my losses and try again another day. But I'm doing it in such a manner that it's not absorbing a lot of my account from a risk management perspective here. Okay, and that is it. This is exactly how I use one indicator with these levels to look for those critical areas. And just to reiterate, I'm going to come back out to the 4 hour and you can see just how they work here. And I'll just clear this indicator off to make things a little easier to see here. All right. Now, one last thing I did forget to mention in this video here is I like the long. I don't like shorting. There are order blocks up here. There's a perfect short up here out of this 4 hour order block as it formed right here, came down, price retested, and then it continued to move downwards this way. I'm really not interested in that. The reason being, looking at my journal and my statistics, I lose a lot when I'm shorting the market. I have a much higher winning percentage when I'm looking for longs. I can't really put a finger on it, but my brain just operates that way, where I'm more comfortable long in the market than I am shorting. And again, that's different for everybody. So if you didn't understand anything, rewind the video. And again, do me a favor, like, subscribe. I have more content coming. I just wanted to share this here with you. This again is how to build a winning strategy with one indicator and using order blocks, how I draw them here. So again, I want to stress that this is what has been working for me and how I trade. I can't guarantee to work for you. I don't make any promises here. Thanks for watching, and we'll see you in the next video.